Well, thanks a bunch for joining us here. And by the way, happy Friday to you. So glad you could join us here today as we get ready to put a bow on this trading week. And we already have a little bit of exciting news to talk about. Let's take a look at some new information that just came across the wire. It is a news item from USDA. On USDA's overnight export sales wire, they said we did sell some soybeans yesterday. We did sell 132,000 tons to China. It was for new crop delivery, and we sold, as a bonus, 132,000 tons to unknown destinations. Sounds very mysterious. So anyway, remember yesterday we heard talk during the trading session that there were rumors going around that China may have been shopping around to buy some soybeans. That's why the beans went up so much yesterday. Well, now that we hear this morning, wonder how much impact that will have on the trade. Now, the markets closed up the Globex session before this news came out a moment ago. Let's see where we ended, shall we? Let's go to the big board and look at the corn prices. The quotes are provided by bar chart. September corn finished 3/4 lower at 601.5. December was down a penny at 605.25. Markets were very sleepy in the overnight trade. Didn't do much of anything. Soybean trade, you had September down 4 cents this morning at 14.5725, and November was down 9 3/4 at 14.08. We'll talk about that in just a second here. On the wheat market in Chicago, you had the September contract down 6.5. It was at 7.76 per bushel. Now in the Kansas City market, you had that same September contract down 5.5 cents at 8.54 3/4. And then on Minneapolis wheat, September was actually down 5.5 cents at 8.88 3/4. Well, we're joined by Brian Hoops of Midwest Market Solutions in Springfield, Missouri. And Brian, the markets had a negative tone in the overnight trade. That's for sure. But now we did get confirmation that we did sell some soybeans yesterday. So obviously that was in the rumor mill yesterday. We had soybeans going about, 50 cents higher on the nearby contracts. And now we're a little bit weaker. Is that one of those buy the rumor, sell the fact type things, or what?
Good morning, Marlon. Yeah, I think it probably will end up being that way. It was pretty much digested by 50-cent higher gains. Yesterday, futures in both corn and soybeans hit 50% retracements on the charts of the last down move. Then we saw some profit taking set in. So I wouldn't be surprised to see, some additional weakness in the markets this morning following these export sales. That's almost 10 million bushels. So that's a pretty big number. And that unknown destination, given the amount, it looks like it'll probably end up being China. We talked yesterday morning after the export sales numbers about our annual sales. And this will help out our soybean sales. We're already about 150 million bushels better for soybean sales than we were a year ago at this time. Corn sales are less than half. So that's really what needs to pick up is our sales of corn as we badly trail year ago levels. But these numbers for soybeans are going to help us out as far as balance sheets. And I think, the rains that are coming in that are forecast for Iowa, that's a change in the forecast from yesterday. That's encouraging some weakness here in these grain markets. So we'll look for, some buying interest start to develop, but it may be at lower money before that buying numbers start to come into the marketplace.
So was that a change in the weather outlook that happened overnight, or what caused the market to turn around like it did?
Yeah, I think it was a combination of we hit that 50% correction level. That was kind of a place where traders thought, let's take some profits off the table in case these weather models change. They did. And that's why we saw prices pull back off of overnight highs. Beans closed about 20 cents off of session highs from the overnight trade. And that forecast did add rain into the state of Iowa. It's going to be very important because we're looking at 100-degree plus temperatures for a lot of the state before that cold front comes in and brings with it some rain. So it's badly going to be needed. The rain's pretty much confined to the eastern belt, but now it's added Iowa into the mix. And that's, of course, our number one soybean corn producing state in the nation.
And of course, as we all know, these forecasts can be kind of fickle sometimes. If they change suddenly to that kind of a pattern, they can change right back the next time around. So you never know. We get new updates every few hours. All right, Brian, we'll take a look at our livestock trade and the potential for a market move there when we come back. Well, we're talking with Brian Hoops of Midwest Market Solutions right now. Brian, the big story this morning was actually the jobs data that came out this morning, and I'm sure you probably saw the numbers and heard about them. They were expecting, 250,000 jobs being added last month, and came in at 528,000. So a sharp increase on the number over what the trade had expected to see. That seemed to put a little pressure on the Dow here this morning. Let me take a look and see what it's doing now. I believe when the numbers came out, it went down like 140 points. Now it's down 210 on the Dow, September at 32,471. So the thinking is that if the employment situation is improving, maybe the Fed will have to tighten interest rates even more or faster than the rate they have been doing. Is that the thinking here?
Yeah, even though these numbers, Marlon, were pretty decent. As you said, 528,000 jobs added. Unemployment numbers fell from 3.6% down to 3.5%. That's constructive, but the thought is the Fed will raise rates by another 3/4 of a basis point at their next opportunity that they have. And that's what's pressuring the Dow. It's pressuring crude oil futures this morning. In addition to it. So, it's you can look at these report two different directions. One that, we're adding jobs, that's great, but the Fed is probably going to raise rates once again. And that's going to put a little pressure here against maybe the livestock, but I think we're going to focus on the cash direction. We also have August option expiration today for live cattle. First notice day is Monday against those August futures. I don't expect we're going to see any deliveries unless the futures market really tanks today, and I don't look for that to happen. But cash has been steady to higher. It's kind of improved as the week has worn on. That's a pretty good sign. And I think I've said this before, but back in the month of May, any positive news was sold by the trade, and it seems like we've turned that corner now to any little negative news in this cattle market is being bought by the trade, by the speculative community.
What kind of trend did you notice this week in that cash trade?
Yeah, we start off the week kind of in that steady note. 135 was a lot of trade in the Southern Plains. By yesterday, it was up to 136. So we're going to end the week steady to $1 higher. And in the Northern dress trade, same type of activity, steady early in the week. And then we're going to end the note or the week here on a $2 to $4 higher note on dress trade because it did pick up as the week went on.
Well, looking at the live cattle, we finished yesterday with the October 30 cents lower at 143.65. But it's important to note that the far out deferred contracts actually closed 30 to 40 cents higher yesterday at the end of the day. On the feeder cattle market, we were a little bit weaker. We had September closing 32 lower at 182.57. And of course, we've been talking about the lean hogs. They have been on a tear lately. October finished $1.75 higher at 97.60. Per hundredweight. And of course, we've been tracking the chart here on the October lean hogs lately. They've been making new highs for the move. What's their next resistance point?
Yeah, you look at that futures contracts, how August is going to go off the board. It's holding a huge premium to where October is. October really needs to narrow that spread between August and in the October futures. We're kind of in a period of seasonal weakness right now. But there's such a discrepancy between the cash markets in October. That's why we're on a tear in some of those deferred contracts to continue to push higher in October, in December, in a fundamental effort to narrow that spread. So we're looking at October gaining here, another $5, $10. In cash market may come down during that time as well, but look for cash to come down, futures to rally to go up and narrow that gap.
That is a wild spread. Well, thanks for pointing that out, Brian. Great to talk with you. Have a great weekend. Brian Hoops of Midwest Market Solutions with us. So, Janet, we'll begin trading at the bottom of the hour.